Welcome back, everyone, to the Biz Beat by SVA. I'm Lee Schwartz, Director of Business Development and Sales here at SVA Certified Public Accountants. And if you're watching us on YouTube, you already noticed that I am not joined today by Eric Trost. Quite the opposite, as a matter of fact. Joining me today is Kirsten Houghton, Principal and the head of our nonprofit group. Kirsten, welcome to the Biz Beat.
Thank you, Lee. This is exciting.
Is it exciting? Are you nervous? Is this your first podcast?
It's my first podcast, although, as you know, I've done a lot of video in the past, so that's helpful. But first podcast. Years and years ago, I did a radio show in the late 90s of the first CPA firm I worked at in Madison. So that would have been like 1997. So it's been a long time.
I'd love to see if there's a radio archive and go back to that. Love to hear what you said.
Yeah.
Talk about all the paper that we used and, all that fun stuff.
Oh, yeah.
The reason Kirsten is here is, as you all know, we've been talking a lot about the One Big Beautiful Bill Act in the last 9 months or so. And there's a lot of impacts from a nonprofit perspective. So we wanted to bring Kirsten in because not only are nonprofits impacted, but many of you who are business owners are either donors to those nonprofits or on boards of those nonprofits. So we wanted to address some of the things that OBBBA impacts as it relates to nonprofits. So just a reminder before we jump in here totally, we are still posting updates and resources at sva.com/OBBBA. That's OBBBA. And there's some very specific nonprofit guidance there as well. But Kirsten, let's jump right in. Let's start kind of big picture.
Okay.
From your perspective, what are, like the top 5 ways that OBBBA impacts nonprofits? Let's start there.
Right. So I think, first of all, that people don't realize that it may impact nonprofit organizations because it is really heavily leaning towards corporations, individuals. But as corporations, individuals, you do contribute and interact with nonprofit organizations. So there are key things that nonprofits have to consider. There's really 5 nonprofit impacts that I'm going to talk about. First is charitable giving incentives. There's now a universal charitable deduction. So for those of you that have been making charitable donations but no longer itemized, even if you give a significant dollar amount and you just fall under the limitations, there's now charitable deductions that can be taken regardless if you're taking the standard deduction as well. So it's up to $1,000 for single people and then up to $2,000 for people filing jointly. So that's new. And it's on a different line in the tax return. You'll see it coming into the tax return.
So Kirsten, this is one of those, we've talked about this a little bit, but this is what some people are calling the above the line deduction.
Right. Okay. Yeah, exactly. Right. So for a nonprofit, the key thing is to communicate, whether through your website or your giving campaigns, that saying your gift may be tax deductible, even if you don't itemize, to keep building that awareness so that somebody who may not give a gift because they're like, I can't deduct it on my taxes anyway, maybe they'll be inspired to do that. So that's the thought there with that. From a nonprofit's perspective, also using donor advised funds, if you're bunching gifts, that could get you over thresholds as well. So going above and beyond the $1,000, $2,000 range and going into a really high dollar amount in a particular year so that you could use your itemized deductions. You could get away from that. Another area is executive compensation. So there will be excise taxes on certain compensation and coverage. It's really applicable to big nonprofit organizations that have very high salaries. So for those of you that are smaller, it probably won't have an effect, but always be aware that this exists and look into it as far as thresholds and see if it applies to you. So that's the biggest thing there. Also, if your organization uses bonuses, deferred comp, things like that, all that could fall under the executive compensation excise tax issue. And then endowments and investment related impacts on nonprofit organizations. So if you have a large endowment, so large investment balances, there is an excise tax element, which for those of you using private foundations, that's always been there. So this would be new for regular 501c3 charities. And then the fourth one, employee benefits, potential taxes on fringes like parking and transit. So it's important to look at that area as well and seeing if you're doing that for your employees, is there taxability in effect there that hadn't been there in the past? And then finally, compliance and planning. So looking at all these different areas, making sure your policies match, what these areas cover, see if you have to review things, bring things to a board vote, things like that. So those are the 5 main things that really affect nonprofits that people may not be thinking about.
So, Kirsten, I know you work with executive directors every day of nonprofits. If you put on your executive director hat and look at this bill, now that you've kind of gone over the main changes here, is this a net positive for nonprofits? Is this a sort of an everything evens out? Like, what do you think? How do you think this ended up?
I think it's a net positive in the donation side, actually, because you can encourage people who don't donate, and maybe their reason is because they can't deduct it on their taxes, that there is that option for single filers and married filing joint for the $1,000 and $2,000. So you could do a lot more donor engagement around that. And also using your donors, encourage them to use donor advised funds. They could bunch contributions. So another way to reach out to donors, which is always good for nonprofit organizations, gives them more opportunity to talk with them. So I think that's really good, that education piece. And then also, it's never a bad idea to review all your compensation and fringe benefit policies anyway. And then making sure that should you fall below thresholds, then you're fine. But then if you're not, you're going above because you are a large organization, that you're aware of that and you can take care of these things in 2026 with your advisor. And so that you're doing everything correctly. So it's a lot of administration and then development on the fundraising side.
Okay, great.
So,
well, any opportunity, I know, many of our clients, any opportunity for additional development is a good thing if they can.
Right.
Yeah. So, all right. So keeping that executive director hat on. So now that you've kind of gone over the high level overview of how this bill impacted nonprofits, like, all right, so you're an executive director. What's kind of the first thing you do now knowing this information?
Right. So one thing I will say first is that make sure you are working with your advisor. So whatever CPA firm you're working with, contacting them, but also working within your management team and board before you start tackling this. So they're aware of this issue and what you need to do. So like I said, look at compensation. So look at your risk there. Are there high salaries that include bonuses as incentives or deferred comp or severance pay, that kind of thing? And then looking at the fringe benefits as well, which would apply to any employee, not just highly compensated employees. So looking at parking, cell phones, if you're providing wellness and education benefits, employer paid memberships, and see if what's taxable, what's not taxable. And then who is it taxable to? So that's something to really dig into regardless of your size. That would apply to anybody. And then the excise tax exposure, that comes into play with the high compensated individuals and also investments if you have high investment balances as well. And then another thing to consider is looking at governance policies. So like I said earlier, looking at your policies, reviewing them, and going through the board as well. So looking at executive comp, board and committee approval, having that in place in your documentation. So if you were ever questioned, you've got all that in line, that compensation is voted on, the awareness of there's any taxes that are due, that kind of thing. And then again, look at compliance. So look at renewals and contracts, considering tax planning, because that would be new for many nonprofit organizations, something they haven't had to do in the past to this level.
Yeah.
So that's the kind
so
of thing.
a lot of new things to think about.
Right.
Kirsten, maybe let's take off the executive director hat and maybe put on that business owner hat, that person
Right.
who's maybe a donor or a board member of a nonprofit. You talked about the above the line deduction. Are there other things now as a donor that that I guess OBBBA has changed the way you might think of donating money?
Right. So like I mentioned earlier, you would know as a single taxpayer, you could give $1,000 up to $1,000, and that's an above the line deduction. So there's that piece. And then as a married filing joint, you would have the $2,000. So maybe you're like, I'm just a regular person. I'm making donations. I normally donate $500 a year. Maybe I'll donate $1,000 because now I can deduct it on my taxes. So it's building that awareness by the nonprofit, but you as an individual being aware that you've got other options. If you are typically a person that gives more or gives a certain amount every other year, but if you could bunch that like through a donor advised funds, or even if you're bunching just personally, So if you were giving, say, I'm just making up numbers, but 5,000 a year normally to different charities, now you say, okay, I'm going to do 10,000, but every other year. And then that may get you over help to get you over the itemized deduction levels and put you into that ability to itemize. This actually happened with the last tax act as well, with the last Trump administration, where people were looking at bunching contributions. So same concept as before.
Okay. So the concepts haven't changed, just some of the numbers have,
Right,
essentially.
exactly.
Yeah.
The real key is that universal deduction. It makes it available to people that may not don't. People may not donate because they can't deduct it. I mean, I have heard that. I've
Right.
heard people say
Yeah.
that. That does exist.
Sure. Sure. So let's talk a little bit about, you talked about how this is going to affect nonprofits generally, but I know,
Right.
some of the questions we sometimes get is, my organization's really small. Like, does this really going to affect me? Maybe can you talk about that a little bit and how this might, if at all, impact small nonprofits?
For small nonprofits, I think the key here is communication with their donors. So, as I said before, your gift might be tax deductible. Consult your advisor. So, acknowledging that there's new laws in place and that you may give, and understanding how that works in your own personal tax return. So again, you are getting that ability to communicate with your donors, talk about the impact of the giving, getting more descriptive on how that would impact your taxes on a limited basis as a nonprofit, because you're not an expert. You don't want to be giving tax advice. Always encouraging them to talk to their advisors. And then keeping things really simple for your donors, giving them timely receipts and all of that information that they need, documentation, so that they can take those above the line deductions that they might not have been able to do in the past. And then for other smaller nonprofits, again, look at the compensation and benefits. Some of those benefits apply to anybody, regardless if they're small or large. It's the compensation, it's much higher dollar amounts. So a very small nonprofit, it probably wouldn't affect. But parking fringes, things like that, that would affect. And then just use your board oversight, obviously, to give you more guidance, and then involve professionals where you need to, even to run by your decisions and conclusions by your CPA firm, or if you've got board members with the qualifications that can give you advice, making sure to do that so you know you're on the right page and you've covered things that are new and are unusual for you because you haven't had to deal with this before.
Yeah. Well, okay, a lot of talk about, fundraising, a lot of other things too, but if you're thinking about this from the fundraise, so okay, now we're taking off our other hats and we're putting on our fundraiser hat, our director of development hat. Is there, I guess, is there an area you think people might be underestimating at this point as it relates to fundraising?
Yeah, I think with this new act and just uncertainty in general, people may consider doing things differently. You have an expectation that XYZ donor gives you $5,000 a year without fail. But with these changes in the tax law, maybe they will do something like bunch their contributions or give less, or maybe even give more. So they may change their giving patterns that you don't anticipate. So another opportunity to look at it that way, of having conversations with your donors and anticipating what their thoughts are, especially those people that consistently give year over year. And then also too, if they are those people that are giving you, say, $500 a year, having conversation, would they be willing to go up to $1,000 now that they could deduct that whole amount?
Right.
Given they're not giving to anybody else, that kind of thing. So it's just that education and messaging and making sure that your donors understand. I think people appreciate as donors that they're being reached out to and being educated on a limited basis, because again, you're not giving tax advice, and then encouraging them to see their advisor shows them you're proactive. It shows them they value your contribution and they value you as a donor. So I think that's also really important. It's a way to turn this into a positive for the nonprofit organization.
For sure. And like you said, any opportunity to reach out to your donors is a good thing. Educate them, engage with them, and hopefully increase their engagement with you. Well, okay, awesome overview, Kirsten. As you think about this now, you've been kind of going over some of the basics. What are the main takeaways here? What are kind of the next steps if you're a nonprofit?
Yeah. So check with your CPA if there's certain impacts for you. Obviously, we mentioned some, the donation piece, and then also the benefit piece, but could be the compensation as well. as well as excise tax on investments. So talk to that person. Review your compensation, look at all your policies, look at your fringe benefits. Then, run things by the board, have approvals of everything, get everything in place is key. Look at your fundraising scenarios for 2026, what you'll do, what you consider as far as communications with your donors, and what kind of one-on-one conversations you may need to have just for education, and also getting an idea of what their thoughts are as well. And then just looking at finance, HR, development, because we put on all those different hats, and looking at that together to making sure everybody within the organization is on the same page and is knowing that things need to be dealt with and handled. Maybe a really minor effect for some nonprofit organizations, and it could be a very large effect for others, depending on size and activities.
Awesome. Great overview. Thank you so much for doing that. I know we've been trying to have you on for a few weeks, and I'm glad we were finally able to do it, because this is definitely information we've been hearing from our clients, not just the nonprofits, but the business owners who are the donors to the nonprofits, many of them, and or sitting on the boards. This is a great overview. So thank you so much. That is going to be a wrap on this week's episode of the Biz Beat, our special nonprofit themed episode. If you are a member of a nonprofit organization, again, whether that's a board member, or you work directly at a nonprofit, be sure to visit sva.com/OBBBA for additional nonprofit specific resources and updates. And as always, I want to make sure I point out that what we discuss here is meant to be general in nature. It's not meant to be specific advice for you or your organization. For that, rely on your advisor. And if you don't have a great advisor to rely on, that is where SVA comes in. Whether you're a business owner or you are a nonprofit, we work with you, and we would love to learn more about you and help you out. So reach out if you do have a need. If not, we'll look forward to having you join us next week on the Biz Beat by SVA. Please make sure to subscribe on Apple Podcasts, on YouTube, or on Spotify. I think that's going to be a wrap here. Thanks again, Kirsten, and everybody have a great week. Yeah, and we will see you next week on the Biz Beat by SVA.
It's the Biz Beat by SVA, breaking down the news of the day, from tax tips to business trends, smart insights from trusted friends. The Biz Beat by SVA.